Something just happened that most people are not paying attention to. While the financial media is obsessing over stock market swings and interest rate debates, a geopolitical earthquake just struck that is sending shockwaves through the precious metals market. And if you do not understand what happened, you're going to miss the biggest signal the gold and silver markets have given us in years. On January 3rd, at 3:46 in the morning, Greenwich Mean Time, the President of the United States gave the order. Within hours, American warplanes were bombing Caracas, the capital of Venezuela. Special forces stormed a compound. And by sunrise, the president of a sovereign nation, Nicolás Maduro, was in handcuffs on a U.S. Navy ship being flown to New York to face narcoterrorism charges. This was not a covert operation. This was not a surgical strike. This was the largest U.S. military operation in Latin America since the invasion of Panama in 1989. Over 10,000 troops, 6,000 sailors, an aircraft carrier group, and the President of the United States standing at a podium at Mar-a-Lago announcing to the world that America will now run Venezuela until further notice. Let that sink in. The United States just invaded a country, toppled its government, captured its leader, and announced that it will occupy and administer a sovereign nation. And the financial markets reacted exactly the way you would expect when the global order fractures. Gold exploded, silver surged, and the war premium that has been dormant for decades just woke up. If you look at the price chart for gold in late January, you will see something remarkable. On January 26th, just days after the Venezuela operation, gold crossed $5,100 per ounce. That was a new all-time high. It was not a small move. It was a violent spike driven by a single narrative: war, geopolitical chaos, the breakdown of international law, and the realization that if the United States can unilaterally invade Venezuela, bomb its capital, and kidnap its president, then no country is safe. No treaty matters. No border is secure. And if no border is secure, then the only asset that holds value is the one that cannot be printed, cannot be debased, and cannot be confiscated by a government that decides the rules no longer apply. That asset is gold, and to a slightly lesser extent, silver. This is what we call the war premium. It is the extra value that precious metals gain when the world realizes that the global system of rules and norms is collapsing. And right now, that premium is being priced into the market in real time. Let me explain the mechanics of what happened. Before the Venezuela invasion, gold was already on a strong uptrend. It had been climbing steadily throughout 2025, driven by concerns about the Federal Reserve, the weakening dollar, inflation fears, and central bank buying. But it was a grinding rally. It was slow, it was technical. Traders were watching support levels and resistance zones. It was a normal bull market. Then came Venezuela, and everything changed. The narrative shifted from economics to survival, from inflation hedging to war hedging, and that shift brought in a completely different class of buyer. We are not talking about retail investors anymore. We are not talking about stackers buying a few coins at the local shop. We are talking about sovereign wealth funds, family offices, ultra-high net worth individuals, the kind of people who have access to intelligence briefings and geopolitical risk assessments, the kind of people who see what is happening in Venezuela and immediately think, what happens if the United States decides to invade another country? What happens if Trump goes after Colombia next? He already threatened it. During a press conference on January 3rd, Trump was asked if he would consider a similar operation in Colombia. His response? Sounds good to me. That is not diplomatic language. That is not strategic ambiguity. That is a president openly signaling that he views military force as a legitimate tool to reshape Latin America, and the markets heard him loud and clear. Colombia is not a small country. It has a population of 50 million. It has significant oil reserves. It has deep ties to both China and Russia. And if the United States invades Colombia, we are not talking about a quick special operation anymore. We are talking about a prolonged military campaign. We are talking about a conflict that could destabilize an entire region. And when markets price and the risk of regional destabilization, they buy gold. They buy it aggressively. Goldman Sachs, one of the most influential investment banks in the world, raised its gold price forecast on January 24th. They increased their target from $4,900 to $5,400 per ounce. Why? Because they see the same thing we see. They see a world where the United States is willing to use military force without international approval, without United Nations authorization, without even the pretense of multilateral cooperation. And in that world, gold is not just a hedge against inflation. It is a hedge against empire. It is a hedge against the unilateral exercise of power by a superpower that no longer believes it needs to follow the rules. And it is not just Goldman Sachs. HSBC published a note in late January explicitly citing geoeconomics issues related to Venezuela as a driver for the recent leg up in gold prices. UBS raised its year-end gold target to $5,200. Analysts across the board are revising their forecasts upward, not because of economic data, not because of Federal Reserve policy, but because of Venezuela. Now let me connect the dots to silver. Silver does not have the same pure, safe haven status as gold. Silver is a hybrid. It is part monetary metal, part industrial commodity, and that hybrid nature makes it behave differently in a war premium environment. On one hand, silver benefits from the same geopolitical fear that drives gold. When investors panic, they buy precious metals, all of them. On the other hand, silver has a unique vulnerability. If the Venezuela situation escalates into a broader conflict, it could disrupt global supply chains. And silver is absolutely critical to modern supply chains. It is used in solar panels, it is used in electric vehicles, it is used in semiconductors, it is used in military hardware, missiles, guidance systems, radar. The defense industry is a massive consumer of silver. And if we are entering an era of increased military conflict, the demand for silver from the defense sector is going to spike. But here's the problem. Most of the world's silver does not come from politically stable countries. Mexico is the largest silver producer in the world. And Trump has already threatened Mexico with tariffs, with border closures, with military action against cartels. Peru is the second largest producer. Bolivia, Chile, Argentina, all major producers. And all of them are watching what happened in Venezuela with absolute terror. Because if the United States is willing to invade Venezuela, bomb its capital, and kidnap its president over alleged drug trafficking, what is stopping the United States from doing the same thing to any other Latin American country that Trump decides is a problem? The answer is nothing. There is no constraint. The international system that was supposed to prevent this kind of behavior, the United Nations, the Organization of American States, international law, none of it stopped the Venezuela operation. None of it even slowed it down. And that means every country in the region is now operating under the assumption that they could be next. This is not speculation. This is not conspiracy theory. Trump literally said it. When asked about Colombia, he said, "It sounds good to me." When asked about deploying ground troops to Venezuela for a long-term occupation, he said he is not afraid of boots on the ground. He is signaling in the clearest possible terms that he views military intervention as a legitimate policy tool. And markets do not like uncertainty. They especially do not like the uncertainty of whether a major commodity-producing region is about to descend into chaos. So what do? They buy the commodity. They buy silver, not because they need it right now, but because they are front-running the possibility that in 6 months or a year the supply might not be there. This is the same dynamic we saw with oil during the Gulf War. Prices spiked not because there was an immediate shortage, but because the market was pricing in the risk of future shortages. And we are seeing the exact same thing happen with silver. Right now, look at the price action in late January. Silver was already on a tear before Venezuela, driven by strong industrial demand and speculation about Federal Reserve policy. But after the invasion, the move accelerated. By January 26th, silver had crossed $107 per ounce. That was a massive gain in a very short period of time. And while some of that move has since retraced, the underlying bid is still there. The war premium is still embedded in the price. And there is another layer to this. Venezuela has oil, the largest proven reserves in the world, larger than Saudi Arabia, larger than Russia. And Trump made it clear the United States intends to control that oil. He said the oil industry would be up and running in 18 months, with American companies investing billions and getting reimbursed through revenue. This is resource extraction, colonialism with a modern coat of paint. And when markets realize the U.S. will invade countries to secure resources, they ask an uncomfortable question. If the U.S. will invade for oil, will it invade for lithium, for rare earth minerals, for silver? Venezuela does not have significant silver reserves. But other countries in the region do. And if the precedent has been set that America can unilaterally invade, overthrow governments, and seize resources, then every resource-rich country just became a target. And that is very bullish for hard assets. Let me give you a specific example. Imagine you are a mining company operating in Bolivia. Bolivia has significant silver and lithium reserves. The current government is left-leaning, has ties to China, and has criticized U.S. policy. After watching Venezuela, you have to ask, what happens if the United States decides Bolivia is a problem? What if Trump decides Bolivian lithium is a national security concern? Do you keep operations there, or do you hedge? You diversify, you buy insurance. And in commodities, the insurance is owning physical metal. Because if supply chains get disrupted, if mines get nationalized, if the country descends into chaos, the value of metal you already own skyrockets. This is why gold and silver are spiking. Not inflation, not interest rates, but because the global order is fracturing. And in a fractured world, the only things that hold value are things that cannot be taken by force. Gold in a vault in Switzerland cannot be bombed. Silver in Singapore cannot be confiscated. But a stock certificate, a bond, a digital entry in a bank, all of those can disappear with the stroke of a pen. This brings us to the final piece of the puzzle, the reaction from the rest of the world. Because while the United States is celebrating this Venezuela operation as a stunning success, the rest of the world is watching in horror. The United Nations Security Council held an emergency meeting. The Secretary General issued a statement saying that the U.S. action set a dangerous precedent. Brazil condemned the invasion. Colombia condemned it. Mexico condemned it. Even European allies expressed concern. Russia and China, unsurprisingly, went further. Russia called it an act of armed aggression. Iran called it a flagrant violation of sovereignty. And while these statements might seem like empty diplomatic rhetoric, they signal something very important. The world is fracturing into camps. There is the United States and its close allies. And then there is everyone else. And everyone else is looking for ways to protect themselves from a superpower that no longer feels constrained by international law. How do they protect themselves? By reducing their dependence on the US dollar. By reducing their holdings of US Treasury bonds. And by increasing their holdings of hard assets that cannot be frozen, sanctioned, or confiscated. That means gold. Central banks around the world have been buying gold at a record pace for the last 3 years, and the Venezuela invasion is going to accelerate that trend. Because if you are a central banker in Turkey or India or Malaysia, and you just watch the United States invade a country and announce that it will run that country's economy, you have to ask yourself a very simple question. What happens if the United States decides to come after us? What happens if we do something that Washington does not like and we wake up to find our dollar reserves frozen? The answer is you diversify. You buy gold. You buy silver. You buy assets that are outside the reach of the U.S. financial system. And that is exactly what is happening right now. The Venezuela invasion is not just a military operation. It is a signal. It is a message to the world that the United States is willing to act unilaterally, violently, and without regard for international norms. And that message is being heard, and it is being priced into the gold and silver markets in real time. So where does this leave us? What happens next? If the situation in Venezuela stabilizes, if the U.S. manages to install a friendly government and extract itself without a prolonged occupation, then the war premium might fade. Gold and silver might pull back. But if the situation escalates, if Colombia becomes the next target, if other countries in the region start to panic, if China or Russia decide to push back, then we are entering a new era. An era where geopolitical risk is not an occasional spike, but a permanent feature of the global landscape. And in that era, gold and silver are not just investments. They are survival tools. The invasion of Venezuela was not just about drugs. It was not just about oil. It was a demonstration of power. It was a statement that the United States will do whatever it wants, whenever it wants, and the rest of the world will just have to deal with it. And the markets are dealing with it by buying gold, by buying silver, by moving capital out of paper and into metal. The war premium is back, and it is not going away anytime soon. Welcome to the new world. Welcome to the era of empire, and welcome to the gold and silver bull market that comes with it.